Money for Nothing is not only the title of a song from the 18th, but also a feeling that many investors get when they receive a dividend. So in today's video we are gonna explain the dividend in details. What is the dividend? What are the dividend paying stocks? What are the important dates you should know about dividends, and all around the dividend. As we said in the previous video, when you buy a stock, you become co-owner of the company, and you have the right of part of the profit of this company. A dividend is usually a cash payment from the earnings of the company that it pays to its investors. From the previous video, we also know that not every company pays dividend. We also know that the dividend is not equal to the earnings of the company divided to all shareholders. We know that the dividend is divided by the board of directors. But then we have the question, what is a dividend stock? So when somebody says it's a dividend stock, it simply means that this company is paying out dividends to its shareholders. It's rewarding the people for holding its stocks, its shares. There are 4 key dates you should know when we talk about dividends. We have the declaration date. This is the date when the company announces that it's gonna pay dividends. Then we have the ex-dividend date. This is the latest date you have to acquire the share in order to get qualified for the dividend. If you acquire the share on the ex-dividend date or later, it's too late, so you're not gonna qualify for the dividend. We have the record date. It's the name when the names of all dividend receivers are recorded from the company. And finally we have the payment date. It's the actual date when you're gonna receive your cash payment for your dividend from your company. For example, when we take the company Coca-Cola, again, the ex-dividend date is the June 11th. This means you have to purchase your share, your stock, before this date. And the earnings date is the July 20th till the July 26th. This is the date when you're gonna receive your dividend payment. When you look up a stock, you're gonna see in the statistics a yield. This just means the rates of how much the stock is paying dividends. For example, if a company has a yield of 4% and you put $100 in that company, you buy stocks worth of $100, at the end of the year you're gonna get $4 or 4% of your investment as a dividend payment. So this is the yield. Just think about it like about your savings account. If you put $100 in your savings account and you have a 4% yearly interest rate, at the end of the year you're gonna receive $4 as an interest payment. So it's basically the same concept. A good question is, should you go and buy stocks with high yield? For example, you're gonna see some stocks with a yield of about 20% or 25-30%. Should you go and buy those stocks? Personally, in my opinion, I see red flags. It's not that it's a scam or anything, but it just seems to me that this dividend is not sustainable. When it sounds too good to be true, it usually is. Usually when the dividend is like 20-25%, it's very temporary. Usually what will happen, they will reduce the dividend substantially, or they'll just cut it to zero. Usually it's a signal that something bad, something wrong is going with that company. So when you see something like a 20 or 30% yield, just be careful. A lot of time it's too good to be true. Another question, how often do companies pay dividends? Well, it depends on the company. Most of the companies are paying dividends quarterly. This means you're gonna receive your dividend every 3 months. It's kind of like a set and regular schedule. So it's very predictable. Other stocks, such as REITs, real estate investment stocks, are gonna pay you dividend monthly. Other stocks, will pay you an annual dividend. There are also some stocks that are gonna pay you whenever they feel like it. So it just depends on the company. Next question. Are dividend stocks the best type of stocks? Well, again, the answer is not necessarily. It just depends on your investment goals. Well, if you go for maximum returns, then dividend stocks are not the best choice for you. Because dividend stocks usually offer lower risk but also less returns. You are gonna get taxed for your dividend because that dividend is a taxable income. Even if you reinvest that dividend or if you leave that money in your brokerage or investment account. In either scenario, you're still gonna get taxed. The amount of taxes you're gonna pay for that dividend, it depends on whether they are ordinary dividends or qualified dividends. Ordinary dividends are gonna get taxed on ordinary regular rates, while qualified dividends are gonna get tax preferences. Whether your dividends are qualified or not is gonna depend on some things that are out of your control, like for example, what is the type of the company, but also on things that are in your control, like for example, for how long are you being a shareholder of this company? Have you been holding the shares for more than 60 days? This only applies to the US investors. If you have a very long investment horizon and you want to maximize your growth, then dividend stocks are the best solution for you. That's it. It's important to see some ratios or numbers which are important when evaluating the dividends. Or now we are gonna talk about the quantitative analysis. In first order we have the dividend per share, DPS. This is the sum of declared dividends issued by a company for every ordinary share outstanding. Then we have the dividend payout ratio, which is calculated as the DPS divided by the EPS or earnings per share, which we mentioned in the previous video. The dividend payout ratio indicates the portion of a company's annual earnings per share that the organization is paying in the form of cash dividends to its shareholders. Generally, a company that pays out less than 50% of its earning in the form of dividends is considered stable, and the company has the potential to raise its earnings over the long term. If you are new at my channel, you can consider subscribing to see more videos like this, and you can support me by liking this video and sharing it.